Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader, and I'm here with your Cabot Weekly Review. I'm recording this late Friday morning as usual. Really not much new to say in the big picture. The major indexes are all down. Just about everything's down this week. And the big low light, I guess it was sort of the retail apocalypse. Started with Walmart, then Target. And you also see in some of the big mega cap names like an Apple, even Tesla, kind of they've been weak anyway, but kind of given up the ghost, which obviously isn't helping the indexes. Now, I will say, just for a couple of rays of light that I have seen this week, one more anecdotal and very short term, but one something that I do watch. The first anecdotal one is just because most of the weakness to this point has been the last few days, has been the Target, Walmart, Apple, the kind of big obvious things. Number one, that does impact sentiment. But number two, we really haven't seen the same sort of weakness out of small caps, mid caps. So the Dow hit a new low on Thursday, I believe, or Wednesday anyway, maybe Thursday as well, and today. But small caps, mid caps, even some growth funds like ARK and all that stuff are still above their old lows. Now, that's just super micro, but just a little bit of something new. The one thing that I do legitimately watch, and I've talked about, and I'm going to show you again here, is the defensive stocks and the consumer staples. Now, you can excuse it away and say XLP broke this week because of the retail stuff, and that's probably true. But to me, it kind of is what it is. There's just fewer places to hide. Even the safe, sturdy, big dividend-paying stocks that hopefully have control over their pretty good control over their costs. Even they're getting tossed overboard. So, and that also happened while these growth funds, hung in there a little bit. So I'm not making too much out of it. I think I tweeted this morning. It's one step. You need to see a few of these things before we do anything. But it's just a couple things I noticed. In the meantime, though, the vast majority of evidence is still negative. The trends are down for most stocks, indexes, funds, you name it. There are some things that are holding in there, but it's for every one of those, there's 5, 6, 7 that are heading down the toboggan slide. So in Cabot Growth Investors model portfolio, we remain highly defensive. We're over 80% cash. I think it's 85% cash. And half of the invested portion is oil stock we've owned for over a year. So it's pretty defensive. I wouldn't mind doing a little buying if the market could stabilize. Like if I'm doing this video in 2 weeks and the market's kind of in this area, maybe up, some stocks have perked up. Maybe I put a little bit of cash to work, but, overall, very defensive until we start to get some of the trends to turn up, okay? Now, the top of the charts, as usual, using a program called MarketSmith. You can learn more at marketsmith.com. It's a product of Investors Business Daily. So this is the NASDAQ here, and this is delayed a little bit, I guess, by 10 minutes. But so, down $80, or 80 points, I should say. But just below here, what I did want to say, so first of all, I wouldn't say so much with the NASDAQ, but let's look at the Dow Industrials, which actually I don't really follow as part of an indicator, but you can see it sunk to new lows yesterday, further new lows today. But if you look at something like the IWM, it still looks terrible overall, but it's it's a little bit up here from the lows last Thursday. Same thing with mid caps. Nothing that can't disappear by today's close or tomorrow, but just a little something I've noticed. Back to the NASDAQ, one thing I just wanted to say is this will take a little bit of time. I'm not saying it's going to take 6 months, but our intermediate term model basically is this is the 25-day simple moving average. One thing that we pride ourselves on is not only do we keep it simple, but it's open. It's not like a secret. We just use the 25 and 50-day simple moving averages. And we need to see these indexes get above the lower of these, which right now is the 25-day line. And for that 25-day line to turn up, which I've said in the past, basically means you have to be higher than you were 5 weeks ago, right? Because you're dropping off something that's lower 25 trading days ago. Right now, 25 trading days is something like, it's somewhere in here, maybe even up here. I didn't actually do the count. So, at this point, unless the NASDAQ rallies 1,500 points in a couple of days, which I'm all for if it wants to do, but, it's probably going to take a little bit of time, obviously, even if we did head higher for an actual trend change for the intermediate term indexes. Same sort of thing with everything at this point. Everything's in gear, which, believe it or not, is kind of a good thing. It's in gear on the downside, which is bad, but there's not the divergences anymore. It's pretty obvious. Everything's pretty much hitting, like I said, the toboggan slide. S&P 500 starting to test, new low ground, very extended to the downside. So we'll see how it plays out going forward. I showed you the small and mid cap names, and here's the New York Composite. Again, a little bit of a positive little thing here. We'll see if that is meaningful going forward. Growth indexes or growth funds, I guess, again, they're not, they're still buried. They still had this little mini crash. This is QQQJ, went from, 30 to 23. So that's 20 something percent in just a few weeks. So that's certainly, if you're a bear, you're saying, hey, this thing is deserved a breather, just to kind of hang out. but there hasn't been the selling pressure on it here recently. Certainly just looks like a pullback overall at this point, but we'll see how it plays out. IPO fund, same sort of thing. So that's about the best I can say. A short term, a little bit of a higher low here. When you get the Dow, which is more obvious, and obviously the Targets and the Walmarts, which are the obvious man on the street sort of stocks, that's like, whoa, 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 Target went down, that catches the headlines. But you see some of these funds that really have been leading the way lower, not leading this week anyway. Just something I'm noting. We'll just see how it plays out, okay? IWO is the Russell 2000 Growth Fund. Same sort of thing. Buried, but a little bit off its low, all right? XLP, I've got my notes out here. This is just something I have been watching for, and this is a decisive break. I mean, this was weak. It came in here, it was weakening, but you can see obviously this was on the Target news. The fund broke, its 200-day line, and really it's just continued lower since then. There's been no buying. What does it mean? Well, we'll see. But in concert, I would just say stuff like the XLV, which is that big sturdy healthcare pharmaceutical, big dividend-paying, cheap healthcare. It's not like the XLP, but it broke down here a few weeks ago. XLU's probably still hanging in there. It came in, but not really breaking down. But the more of this defensive stuff that comes down, I'm not saying that in and of itself is good, but I think as long as that game was being played where growth is getting killed and defensive stocks were holding up, like you needed to see that change. So now at least we're seeing a change here in the defensive stocks. I think it's I don't want to say it's a good thing, but it's probably a necessary thing that tells you we're further along the path toward trying to etch out a low. So that's just something notable this week. And just to show you, because I did get some questions. I do get questions from a lot of people here and there just on when you get these big breaks in stocks. I mean, I remember I get them from Facebook months ago, and it's just like, hey man, this is Target. Can we buy a little bit here? My main answer is just not my style. I mean, I do what I do, so it's not really what I would do. But I would just, even bigger than that, is just when you do get a big popular stock, especially, which is very well owned, 3,100 funds own Target, and you have this outsized breakdown on earnings. Obviously, the news is bad. I'm not saying it's going to zero or, I'll take all the $0 Target stock I can get, But, it's just, usually it's going to continue lower here. I mean, you see that with all earnings gaps anyway, but you're in a kind of a bear phase in the market. You're getting these big breaks. Walmart's another one. I don't follow these companies really at all, so I don't know. Maybe it's historically cheap relative to something. Maybe it's not. Maybe they're about to buy back a ton of stock or hike the dividend. But clearly the market is seeing something here, and you get this huge volume. And it's not like the stock had been going down for 6 months and then it implodes, where it could be climactic. It's kind of not right off the top, but it's not like there had been a ton of selling in these things. Long story short, I wouldn't be fighting the market with these. If you want to fritter away a little money, you can do that with anything, whether it's in the market or in the casino. But I would just stay away from these things. And there's still the chance that there could be, follow-on action to the downside. And you're seeing it play out with others too. Not to just, relay the downside, but this is 5 below. Great growth story, but again, in the retail space and just not a disaster like Target and all that. But again, now you're seeing kind of the accelerating selling volume on the downside. So just be careful of those. The big goal again is the next uptrend will be sustained. There'll be a lot of opportunities, probably names we don't even know about yet, at least to some point. But, you got to get from here to there with your confidence and capital intact, okay? Going into names. Still a lot of energy stuff. The one thing I would say here, we're seeing more. Let me do this first. So here's Devon Energy, DVN. This looks fine. It's up and down, obviously. The market can yank it around, but I mean, it's not early, but every time it comes in here, you get sort of a rush of buying afterwards to new highs. Now, maybe it blows off on the upside, and who knows? But so far, so good on a lot of these. But I will say we are seeing, even in the oil spot patch, some of the secondary and even some of the primary name. So this is like Matador Resources. Big picture, it's still kind of bottom left to top right on the chart. But you can see, it's really kind of in a little bit of a short-term downtrend, or it's in a correction here. Oasis Petroleum, good story, going through a merger, but just kind of not really able to crack that code. PDC Energy, again, they're going through a merger. They're buying somebody else, but huge cash flow projections, even at lower oil, very quote-unquote cheap. But, the stock is sort of starting to say, like, maybe it's already discounted some of the stuff. So we're seeing a little bit more bifurcation there. Now, I still do see some decent setups, but I think it's one of these things, like if you're buying commodities now, that's fine, but it's got to be one of these things where you're buying it, you're putting in a stop near support, and then if it doesn't work, okay, you take a paper cut, and if it does work, great, but you got to have that sort of plan in place, okay? So here's just a few names. This is New Fortress Energy, which it's sort of a little bit of the shipping stock like LNG plus some terminals and things like that. It is a new name, which I like, and it has shown, you can see it, it's had a big kind of history, but really it just had a change in character here, and really it's just gone straight sideways the last couple of months. And it's sliding a little bit here, but no selling, and 50 days there. So I'm not telling you to buy it right here. Maybe you wait for a pop higher to make sure that it wants to get going. But overall, it's a pretty nice setup. Coterra Energy. This is the old Cabot Oil and Gas, no relation to us, and Cimarex Energy, I think. And you can see it's sort of half. It's more natural gas now than oil, but it's both. And it's kind of been very choppy here, so hard to hang on to. But really, if you step back and look at it, it's just been riding the 25-day line for the most part, maybe the 50-day line. And again, maybe you can say it's losing some steam here, but maybe not. So it seems to be a decent risk reward. How you want to play it, I'll leave that up to you. I wanted to mention some of the coal names, same sort of thing, but this is one of the better looking ones. This is Alliance Resource Partners. Big reaction higher. This was actually ahead of earnings. Stalling out a little bit, so maybe pullbacks, but looks fine. That's one to keep an eye on. Oil services. So this is a lower priced one. It's a little too thin for me, but this is next tier oil services. Nice, kind of blast off there on volume. I think I've mentioned this before. And it's just been basically kind of riding its 25-day line higher, now 50-day. It's getting a little sloppy in here, and it's a low price stock. Maybe it keels over 20% on Monday. I mean, who knows? But this is just, overall, it's kind of trying to hold the 50-day line a couple times in here. Really isn't showing that much weakness. Just kind of an interesting name to keep an eye on. Civitas Resources, kind of back to the oil theme in terms of the production. It's actually easier to see on the weekly. It never got super hot, which you can look at two different ways. You can say it's not a real leader, which you can say that. Or you could say, well, maybe it's, they're going to kind of sell some of these things that have had runs and buy some of the ones in here. But bottom line, it's kind of this base on base formation. Let's just see what happens. It hasn't really participated yet, and it's all over the place. But maybe if the market can find a low and some of the commodities have another run, it could get out on the upside. And then EQT, which I think is the biggest natural gas provider in the U.S. You could see, huge breakout and almost like a flagpole right in here. And since then, it's been 1, 2, 3, 4. So 5 weeks, kind of hit the 10-week line, found support. A little bit of selling, shakeout, but maybe it comes down here and fails. But overall, still kind of a normal pattern here after such a huge run consolidation. Okay, so there's still a lot of commodity. There's still some commodities out there. There are more coal stocks that look iffy. Deere today, just off the top of my head, reported earnings, and it's kind of harder to see on this. Yeah, it's easier to see on this chart. This is the weekly chart. Not that I was really following Deere, but agricultural stuff. So we'll see what happens. There are some things that are thinning out, so we'll see how it goes. On the growth side, I mean, it's tough. You're kind of looking for things that are at least showing some volume support. One thing I wrote in this week's Growth Investor was you're just not going to find a lot of stocks that had a run, correcting normally, and the market is hitting slightly lower lows, but this one's hitting higher lows, and it's ready to take off because everything's in the toilet. So basically what you're looking for, one of the big clues I look for now is some, real volume support and something at least holding support. So this is Shift 4, I almost said Foursquare, symbol FOUR. It's another one of these payment companies, Square, PayPal, Affirm, those are toast. But this is kind of a newer name, and it's a big name. It's a decent sized company, 400 million in quarterly revenue. And it got hit, 50, 60%, but you can see it's kind of held support in here, and it did react decently. It didn't even react well to earnings, but it's found some support in here around in the 40 to 45 area. Big sales and earnings growth. You can see last week was one of its bigger volume weeks here in a few months. So just something to flag, keep an eye on, back burner, watch list, whatever you want to call it. Celsius, CELH, same sort of thing. I think I mentioned this last week. You got this volume clue on earnings, biggest in, I think it was 9 months, something like that. Still has a ton of work to do. It's below the 40-week line, so it's not ready to go. In fact, I just noticed yesterday, again, it kind of had a little resistance in this 60 area or whatever. Tried to poke above it, and then people sell that. So we're still in that sort of environment clearly. But overall, kind of holding up here, and it's had some of these nice volume clues on the daily and the weekly chart. of late. Livent Corp, which symbol is lithium, LTHM. Yesterday it got within like 10% of all-time highs, which, in this market is a lot. This one and Albemarle, ALB, are kind of the two lithium plays. ALB is definitely more the institutional play, I think. This one looks good too, though. Excuse me, got a frog in my throat. Big reaction to earnings here. You're going to see the volume clue, whatever, the biggest in a year and a half, I think it was. And overall, this really just on this correction doesn't look super abnormal. It certainly doesn't look like we've been in a growth stock horror show. So we'll see how it goes. Of course, it's not a pure growth stock, lithium, but it's kind of a growth commodity. Intracellular something or other, intracellular therapies, ITCI. This is probably a little, I don't want to say speculative for me, but still losing money. But they have a big new drug. You can see it's tiny sales now, but it's supposed to be, really catch on quickly here. What's interesting to me is sort of what it should be. I mean, a money-losing biotech, just to give you an example, not to go on a tangent here like I always do, but this is XBI, which, by the way, to go on another tangent, XBI hasn't made any progress for like 7.5 years. I think biotechs and medicals could be the leaders growth-wise of the next uptrend whenever that starts. Not saying that because of the chart, but just because they've been out of favor for so long. And, there's always M&A in the sector that can spark things. So anyway, that's an aside. But you can just see what the average sort of biotech stock has been doing. So to see something like ITCI do this in such a horrible market, and then it did get hit and it reacted well. It got hit. You can see it was holding up and it's like, okay, well, now it's done. Hits the 200-day line, reports earnings, and then there you go. And the stock's back close to its old highs. And I'm not saying, it could easily come back down again, but net, that's holding up pretty well. So ITCI, it's a mover. Halozyme, this is one of the top ones on my watch list. I think the stock wants to go higher if the market can get out of its own way, which it doesn't yet. So, maybe it collapses eventually, but we mentioned this most weeks. 3-week pullback. And then I'm impressed this week how, again, it got pulled back with the market, but as soon as the pressure's kind of come off the market, pressure hasn't really come off the market. This stock, it reported earnings. It didn't even react that well to earnings, but you can see it's just been right back to its old sort of its multi-month high, its recent high. Okay, so that looks pretty good. Blackstone BX, again, it's not ready for prime time, but it's just sort of, it's in the same range. I'm looking for some of these stocks. They're in the same range as they were in late January, which is kind of that initial market low before the invasion. And it's hanging in there. Again, you had a little bit of volume clue last week. You had a big volume clue on earnings in January, February, whatever this was. That was the initial low. So it's trying to hang in there. And the fact that it's doing that as a bull market stock in a bear phase is kind of impressive. So we'll see. Maybe it implodes, but the longer it can hold up, the better. Just a couple more names that I'm flagging. Again, these are still buried, but this is Crowd, Palo Alto Networks, which I'll mention in a second. That reported earnings. It's up this morning. We'll see how it closes. But you're looking for signs of support. You see how last week it closed near its high. This week, CrowdStrike's trying to close near its high. Volume's probably going to be above average again. Does that mean it's ready to go? No, but it's a sign that there's at least somebody is fighting a battle in there as opposed to just the bears are just crushing it. Palo Alto Networks, kind of similar. Last week, volume picked up, stock closed decently. This week, volume picked up. It's kind of closing, well, at this point, it's mid-range. So we'll see. We'll see if these cybersecurity names are just the next in line to get killed, or maybe we are going to find some support on some of these, okay? Two more on semi, chip stocks. I'm not crazy about next year. There's like no earnings growth projections, which I'm not huge on, but it's not an expensive stock if you care about that, 15 times earnings. And the stock, got hit initially, and it's just kind of, it doesn't look great, but it's just kind of grinding sideways in here. You can see on the daily chart, it's just kind of, tedious but testing, but every time it gets down there, it finds support. It actually reacted decently to earnings, which were way better than expectations. The relative performance line right here, this blue line, is near a new high. So that's kind of interesting. And then back, this is sort of in the CrowdStrike camp. This is Enphase Energy, ENPH. It's still buried. You can see it. It had this big correction, then it crashed with the market. But you can see it's just kind of a little bit of higher highs here. It's actually up this week. Big support last week. I wouldn't say volume was anything great. The numbers are big. The projections are big. It's still 40% off its high, but you're just starting to, you're trying to look for some things that are showing a little bit of relative strength and actually, starting to dance maybe to their own drummer. Now, obviously, it's still vulnerable, but you keep an eye on some of these things because so far you keep an eye on these things and, hey, this looks pretty good, and then boom, it gets crushed, and your hopes fade within a day or two, right? But one of these days, whether it's sooner or later, something like this, end phase or something else, you're going to say, oh, there's higher lows in here. There's some good volume clues, yada, yada. And then all of a sudden the stock comes in and it's boom, 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 and 6 days up in a row on big volume. And the market looks a little better and you're like, whoa, what's going on here? So you want to be prepared, because when the market does turn, I'm not saying it's going to turn all in a day. It's not. But you want to have those names on your list and constantly be screening, because I can guarantee you, the one thing I will guarantee is when the market does turn, most people aren't going to say, aha, the market just turned up, I'm ready to go buy. No, most people are going to say, this isn't going to work. It's not going to happen. This stock can't work. What about this? The Fed, it's going to be a lot of bad news. So you got to kind of filter that out by keeping an eye on the charts. Okay. Back to what we're seeing in the market. Listen, we've been down. Just keep an eye on things. I mean, the Nasdaq's been down and the market's been down 7 or 8 weeks in a row. I think the Dow is down 8 weeks in a row, which is very rare, I think. So that doesn't mean it can't keep going. Maybe we have one big whoosh lower or something like that. But we'll see how it goes. We're 30% down into this bear phase for the Nasdaq. There will be another bull market. You are seeing some stocks start to resist, but you just got to wait for the bulls to really take control before putting much money into shark-infested waters. Okay, that's all the time I have for today. Thanks for listening, and as always, come by again next week for another Cabot Weekly Review.